Hello friends, this is Yogesh Bhausar and I've been making this video after a very long time because I was a bit busy with one of the projects. This video has been made so that I can introduce my new indicator, that is YTA valuation, which complements my YTA system, which hundreds of students are already using across the global. I hope you are all loving it and you will also love my new YTA valuation indicator or a script that will run on a trading view. Before we start or I give you a presentation, I just want to make sure that this script or indicator does not guarantee any kind of returns. I'm not a SEBI registered investor. So whatever I show you is only for presentation and educational purpose and does not guarantee any returns. It only helps you to take a good decision while you have all the other parameters you have identified, whether you want to take it or you don't want to take it up. So it just helps you to, any kind of a fundamental indicator or any kind of fundamental analysis, what you do, or technical analysis you do. They are just an indicator which helps you to take your decision or gives you a second opinion, but does not guarantee anything. Okay, with that disclaimer, I would go ahead with my presentation, and I'm very excited to share with you my new update or a new indicator. This is not the part of YTA system, so you have an option to go only for YTA valuation, or you can take a combination of YTA system plus YTA valuation. So let me guys share with you the screen right now. So currently what you all see here is my indicator that I have introduced, that is YTA valuation. Now, when I double click this thing, you will see this item number 1 and 2, which is PE ratio and net income. There is an option for you all to go for any other parameters that TradingView gives an option. So if I click over here, you can see there are so many options over here that are coming. Okay. So I have given you two more option to add as per your convenience. What I use is basically PE and net income. So because basically what this indicator will show you, I will explain you later on. But I'm just trying to give you a review of what parameters does it have, so it makes your decision making much more simpler. Okay, so you can toggle one more over here and go for, like, say, total debt or whatever interest expenses or whatever this parameter is given. So I'm just not using the one more one and an extra one. You can go for it later on if you want. Right now, I'm just taking P ratio, net income, and one extra, that is EPS. Okay. Now over here, period and number, if you toggle over here, you'll see quarter on quarter, year on year, and TTM. So I personally use TTM because I like to see TTM in P ratio, because I calculate P ratios on 12th month basis. Okay, you can select as many you want. This is basically how many quarters you want details about the numbers. So I've selected 5. So it will give you, if you see, calculate 1, 2, 3, 4, 5, and the current one, that is the 6th one. So if you want, say, total last 10 quarters, what it is doing. So what you can do, you can just press over here 9, and you will see total 10 number of, when you click OK, it will show you total 10 number. So right now I'm just keeping it 5. Other one is just keep this as clicked, because it will show you quarter on quarter and year on year net income changes. Okay. Now this is the size of the numbers of the indicator. If you want tiny, if you want large, if you want huge, depending upon how far you are sitting or how close you are sitting, how it fits on your screen. So all that you can select the font of the indicator. Now this is where you want to place it. I generally place on the entire screen on the middle left hand side. So it is easy for my other entire candlestick pattern and my YTA system to fit in properly. Okay. So this is generally what my indicator does. Okay. My indicator is basically a framework of it. Now, how will it help you? All that is the main important question. That everything is fine, but how will it help you to take a trading decision? Now, if you see that my indicator is basically divided into three main categories, that it's undervalued, overvalued, and fair valued. Okay. Now, whenever the stock is undervalued, whether it in quarter or it can be on year basis, it will show you, uh, see over here, year on year, the stock is undervalued in green color. Okay. On quarter basis, over here it is showing overvalued. And in particular, in June quarter in 2023, it showed fair value. Now, how is this fair valued, undervalued, or overvalued is calculated? Now, what we have done, it's my particular formula, which is in it, which I will not may be able to disclose with you all guys. So the thing is, what it does is it calculates the net income from the previous year and quarter net income to the P that has been derived on TTM. Now, just imagine that if you want to go and buy a tomato, okay? Now, for a tomato, 1 kg tomato is like, say, 20 rupees. You wouldn't mind paying 20 rupees for 1 kg of tomato, but because it is a perfectly fair value for it and you can afford it. Now, tomorrow, say, due to some uh, bad weather, too much of rain, or whatever can be the circumstances, the same tomato is costing you 40 rupees. So what would you do in that case? The product is the same, the cost has increased. So what will you do, that you will reduce the consumption of this tomato at this point of time. After some time, you realize that there's a huge shortage in the tomatoes. Uh, the cost of the tomato has gone up to 80 rupees. Would you buy? No. What will you do? You will avoid using tomato and you will shift to the products, or you will might not make vegetables which requires tomato. Because why? It has become fairly overvalued of that particular product. Okay. So you will not like to pay 2 times, 3 times the cost of a tomato, which fairly is around 18 to 20 rupees on a very larger base of the particular years that you have been paying. So suddenly when it becomes overvalued to its net income to the P ratio, as per my formula, it will show you overvalued. Okay. And if the stock of a product is undervalued to its net income compared to its P, it will show you undervalued. Okay. Now this complements my uh, YTA system very well. So what happens is that if you see, we have a wonderful breakout in the YTA system over here. Okay. Now, if I see on the year on year basis, if I compare it over here, it is showing me undervalued. Okay. Now, how do I go with it to whether it is undervalued or not? This is just indicator, if I want to go more deep inside, how will I take help of it? Now, what will I see? I will go more 2, 3 numbers below in net income with the current one. This is the current one. What you can see is that. So what will I do? I will go 3, 4 or whatever I want to compare. And currently over here, since I've taken 6 numbers, that is 1, 2, 3, 4, 5, 6, total 6 quarters year on year and quarter on quarter. So I will see from the bottom, like, is the net income of my company gradually increasing? Understand, the most important work of a company is to increase their net income for their investors. Okay. They need to consistently keep on increasing their profits. No matter what it is, you would not like to invest in a company which is making losses. Okay. Or which has a very a shaky kind of a net income. You like to invest uh, in a company which gives consistent uh, net profit. Okay, so we are trying to see from where does the net profit is non-stop increasing. So if you see over here from 2022 September, we have 25,426 million. Then in the next year, it became 30,000. Okay, so what happens is over here, if you see the year-on-year growth and quarter-on-quarter growth is 20% and 87% from the previous comparative number. Then it jumped to 33,364 million. So it was nearly around 9% returns. Overall, year on year, it gave a 91%. Now, when this net profit has been compared to the P ratio of TTML, it gives you the under whether the income is worth the multiples that you are paying currently. That is, over here, you are paying 21, 26 P. Whether the income growth is worth, net income growth is worth paying that much multiples or not on the current um, market price. So it shows you undervalued. Over here, what happened when the stock gave, the net income is increasing, but if you see from 20%, it went to 9%, it went to 5%. Okay. Simultaneously on year from 87%, it jumped to 91%, but it came down to 63%. But on the year basis, the company still showed it's undervalued. But on quarter, because the growth is going down and the P that multiples that you're paying on quarterly basis of the current market price was only fair valued. Okay, now you need to understand, do you want a stock which is fairly valued and the current price? When the stock is at the fair value, you should wait for the stock to retrace back and then buy. So what happens? The stock is going far and going up non-stop. The prices are rising due to market is bullish or whatever it can be. Maybe the sector tailwind is there. So what happens? You are paying 20x for a fair value, which is not a good sign. What would you do? You would love the stock to give you a pullback at a fair valuation. Absolutely. You would not love to give, a higher price for a fairly valued stock, because there can be very less margin of safety. So what you would do, you would let the stock give a little bit of pullback, and somewhere around the bottom or somewhere around the support level, you will buy it so that it will cover up for that fair valued pullback, and again it will go back when the market goes up. So you will get this gap. Okay. But in overvalued situation, compared to in quarter on quarter, if you see over here, the stock was 5% returns, then it went lower at 1.6% returns, and it went 0.2% return. So what happens in quarter on quarter basis, the sales is deteriorating. Maybe the sales must be high, the OPM must be going low, and the net income over here is going lower and lower from past 3 quarters. And that's where you can see the system has already given you a red flag that please make sure that you are not paying very high valuation for a particular stock, and the stock is giving you fair valuation. Then as and when the net profit is going down, it is giving you an overvaluation. That means every expensive price, as and when the price is rising, you are ready to buy. You need to understand that on the comparative of 20p, 23p, 29p, you are paying premium for an overvalued stock compared to its net quarterly incomes. Okay, why? Because the net income is going down slow and slow, but the P is going high because of the market bullishness. The people are ready to pay a 29x income, 29x to the price, current price, for the future earning, which does not seem to me valuable as of now. So what happens is that you are taking more and more risk as and when the share price is going up, because net income is not matching in quarter basis. But if you compare same with year on year basis, what is happening? If you see over here in March 2023 valuation on the net income of year on year basis was 91%. Then it came lower to 63%. Then it came even more lower to 40%, and it came to 16%. So what happens over here? Even the net income is rising. It is not rising in multiple net income. It's rising gradually. Okay, but it's not taking a good leap. It's rising like 1, 2, 3, 4, 5, 6, but it's not making like 1, 4, 9, 15. Okay. So we have to understand on the other side, when the net income is rising gradually, your P ratios is also rising. So that's where the stock is getting. So net income is like going up like that, but P ratio is rising like this. So for a little moment of an income, you are paying an expensive valuation to the company at the current price. You have to understand that whether you want to invest in such kind of company or not. Okay, it does not give you that, okay, fine, it's like buy or sell it on the spot. It's not a buy sell signal, but it will give you a little bit of perspective of the company, that the momentum of the net income is slow, but the momentum of the P ratio is very fast. Okay, now with the same thing, you should also compare the EPS. Okay. Now what happens over here is EPS was 9.57. Over here was 10.43. Over here 10.99. It's 11.69 and 11.94. So what happens as the slowly the net income is rising, faster is the P ratio, as well as the EPS is also rising. So what happens out of three category, you can understand the P ratio is rising very quickly. That is, the stock is getting expensive and expensive with every quarterly and year on year result. The net income is rising very slow. Gradually, the EPS is also rising. That means the earning per share is also rising. So out of three categories, you can say that two is saying okay, and one is getting a little bit expensive. Generally, I would like to say that any stock with the higher PE than 30 is little bit risk. Okay, when the market is very bullish, try to avoid giving any company more than 30 PE. So why? Because what happens, the margin of cushion is getting slimmer and slimmer. Imagine that next quarter, suddenly, if you feel like the stock is, the net income did not go as per expected by the market, and you gave 35, 40 or 50 PE. What will happen? Because of the slow growth of the net income, maybe just next year it comes negative percentage, not maybe not a negative income, but a negative percentile than the previous year. What will happen? The stock will crash. Why? Because you paid a very high premium P that was around 30, 35, 40, 50. It will come down to a fair value. So try not to give very high P's to your stock until unless you know the future of the company, like it has very high uh, order book with it, and you feel like if they keep on giving their order on time, the current multiples that you're paying with the increasing income, it's fine with me. So in such type of cases, you can give higher Ps. But when you see the net income is growing very gradually, like you can see right now in Tata Power, the jump was maximum over here was around from 25 to 30 to 20%. And from there, it is just slowing away. Okay, with the slow growth of net income, the P is rising very fast. So you know that people are taking very high risk because of the market bullishness in power sector. Okay, maybe people know something what you do not know. You have to go deep dive into the sector, what Tata Power is trying to get some MOU sign, or it's into somewhere to sign a very big deal with the government, or government is giving some very big contract to them, or They are trying to get some governmental changes are happening, which people are ready to pay that much time of multiples with this current slow moving income, then it is okay to pay. But if you consider that I have no idea, I'm just a layman, and if I see the PE is rising very fast and the net income is rising very slow, you can take little bit of hint from such kind of fair value is coming, more and more overvaluation is coming. So it's a basically a red flag. If you do not have any news in hand and you are not able to capture, the best part that you can do is avoid. Now I will share with you a stock, like everybody is so excited about RVNL, and then suddenly from say 300 something, it just crashed. It didn't crash too much, but it came down significantly. And then people started scratching their head that what happened suddenly, why such a big retrace from the top. And I will show you what exactly the stock was trying to grasp. Okay. So now if we see from the high of 345, the stock over here came down to low of 223. So if I measure from the top, the stock gave a retrace of around 35%. Okay. Now, how we could have maybe not saved your 35%, but how you could have understood with the help of my YTA valuation. Let's understand that. Now, what happened over here, if you see the P was approximate around 5. Okay. Suddenly, the P started shooting up and it went to 26 currently. Okay. Now, if you see, the growth rate is over here is mix. Okay. From 6%, it went to once minus 1.3. So the growth was not less. It gave over here was 14,395 million. It came lower than the previous quarterly on year and year, that is 14,206 million. So what happened over here on Q on Q, it showed a negative growth. So what happened on Q on Q, it showed the stock has already started becoming an overvalued stock. So whatever this rally was, okay, you need to be very cautious. Suddenly 1 quarter, 2 quarter, 3 quarter, 4 quarters. Even when the sales is rising, the P is also rising. I mean, sorry, the net income is rising. The P is also rising. But what happened? The net income is rising slow. The P is shooting very fast. So what happened for the slow growth? You are paying 26 to 20 over here, 23 to 26 multiples of slow growth company. What happens? The people are taking higher risk. Suddenly what happened? On Y, if you notice, it gave a overvaluation over here. Suddenly, because of continuous 4 quarters, it was showing you overvalued. The company which was showing you undervalued on the year on year suddenly gave an overvaluation over here. So continuous overvaluation in the quarter on quarter basis, and on the yearly basis, it gave a year overvaluation. Over here, if you see, there is no significant jump in the EPS also. Okay. So what happened? Suddenly people realized that at 347, you are paying 26 multiples what for a very slow growth net income. Okay. So what happened? They tried to slash down. So what happened? There was a huge profit booking in the company. So what happens every time in the market when the stock goes very fast up? Okay. The stock price zooms. Okay. But unfortunately, the net income is very slow and the P is shooting very fast. So at one point of time, the smart traders who are knowledgeable, like mutual funds, like big private investors who have a great team who understands all these numbers, what will they do? They will start offloading to the stock to the retailers. Now, when the offloading happens to the retailers, retailers just keeps on reading good news in the market, but they don't have access to such kind of amazing uh, valuation that they don't understand. They are so worried about fundamental has made up so complex game for the retailers that they are not able to understand how to get that three valuation, that is overvaluation, overvalued stock, undervalued stock, or fair valued stock. So this is how you could have identified. Now, when I say that the company is also growing very fast, net income is also growing very fast, stock price is also going very fast. Along with that, P is also growing very fast. So I'll give you that one of the example is uh, Electra Green company. Now, if you see in Electra Green, okay, so from here, say around 295, the stock has reached to around 2,250 rupees. Now, what is the growth over here? Now, growth is almost 625% returns. Okay. So how we could have taken a judgment with the help of the fundamental stock valuation. Sorry for that. Now, what happens? The company, if you're seeing the net income is growing from 546 million, 564 million, 656 million, 670 million, 775 million, 901 million. Can you see the gradual growth within 1, 2, 3, 4, 5, 6 quarterly results? A company which was growing at 546 million has almost doubled. Okay, so what happened because of this doubling effect? Can you see the growth was so fast? The people started assuming, people started calculating that this stock has more potential in next coming 6 more quarters to go even more faster. So what happened? The PE ratios also started jumping from 88 to 122. If you see in between, it went to even 127. In between, uh, we had an income of higher percentage, but the, I mean, higher number, like from 656 to 670. What happened? It just grew 2%. So what happened? Because of this 2% on quarter P ratio, people were paying higher valuation. It came overvalued stock. But just because one comes does not, you have to react to it, you know. You need to give more 1, 2 quarters time for you to get a perfect analysis like we got in RVNL. You know, it was like 4 quarters nonstop. The company on quarter was giving you overvaluation. Suddenly on the year on year, it gave you overvalued at stock, just gave 35% pullback. Over here, what happens suddenly? Again, the company grew by 15% on quarter basis. Okay. And now if you see on year basis, the company on an average is giving you 40% or more than 40% return from past so many quarters. Okay. So what happens on year basis? You can see the stock is only undervalued. So what is happening? No matter, even if you are giving a higher P, the growth is even more faster than the P ratio. And if you can see over here on EPS side also, it's 6.65, 6.85, 7.99, 8.16, 9.444, 10.98. As and when the net income is also rising, the EPS is also rising, the P is also shooting up, the stock price is also shooting up. But if you see overall, it's still an undervalued stock. Why? Because even if you're paying 122 multiples of the current earnings, the net income is rising even more faster than the PE ratio of the multiples. Okay, so what happens? It depends upon sector to sector. So when I was making this indicator, I was been told that guys, Yogesh, what happens is this PE ratio is very subjective. Uh, it is very uh, sector oriented. It is very different from sector to sector. I said, I agree totally what you're trying to say, but I want to make something maybe not very mathematical correctly, but something logical where even retail traders are able to take advantage of it. Okay. Now, how this would have been fantastic. Now, today, if I get a breakout over here at 2200, 22,300, what will I just see? Whether the quarter on quarter is undervalued? Check. Year on year is undervalued? Check. Is EPS is rising? Check. Is my net income is rising faster? No, it's not very slow, like 656, 660, 660, 665. No, it's rising at a faster pace. A 546 million company has turned to 901 million company in just in 5 to 6 quarters. Okay, the P is also rising, but am I comfortable to pay? What will I do? I will go and check the balance sheet, whether CFO is a good conversion rate or not. My receivables are not rising too much. Are they entering into debt uh, trap or not? Whether the interest they are able to pay or not. There is a no high debt to equity ratio or not. And then I will go and see in the BSE side whether if they are people are sorry, if people are paying 122 PE at the current earnings and it is still growing at the faster pace, does the company is coming up with new expansion plans or not? Whether the sector is growing at that pace or not. It is into EV manufacturing buses. So we know right now EV is at a very boom sector, and government are also giving a lot of incentives to the state governments to convert their old diesel and petrol buses into EV buses. So whether these companies are getting non-stop orders from the state government to convert the buses or not. So all that I will take into parameter, not just this, but I will go beyond a little bit than this, because everything cannot be summarized into one indicator. We have to do a little bit of hard work, but this can be a first step to at least to make sure that whether you want to go for that stock or not. Okay, so now if you see this Tata Investment, which is going non-stop upper circuit. Okay, so now let's see how does it looks over here. A stock with the help of the YTA system gave a breakout over here, and it has given a fantastic rally of 240%. Okay, so what made the changes over here? First, there was a huge volumes YTA system giving you signal over here. So that the system is already there. You can go to my YTA school YouTube channel, and you can identify this video how to use it. And if you have not taken this YTA system, I highly recommend that please go for YTA system. It will make your life much more easier, because if you would have taken a trade at say 2853, uh, first of all, people say whether it is valued, highly valued, undervalued, or fair value with the help of the stock price. Oh my God, 2800, it's very highly valued, but price is just a number. It does not give you any kind of undervalued or overvalued or fair value with the stock price. Okay, we have to compare it with the PE ratio, but that's a different topic. Over here, if you see at 2,850 rupees, when it has given a breakout, the stock is giving non-stop upper circuit and went to 9,728. Okay, now it's just because indicators has lined up, it is going. No, the story lies with the help of the uh, valuation game. Okay, now we have to see whether the company's net income is rising or not. If you see over here, it was 2,570 million. The next quarter, it gave 2,517 million, and the returns were negative. So when the negative returns came over here with my formula, it was showing you non-stop for 1, 2, 3 quarters overvalued, overvalued, overvalued. That means on the quarter-on-quarter basis, even if the numbers are rising, see over here, 2,517 million. The next was only 2,519 million. If you see, the returns are not that great. The net income is not that great to be very excited. It is higher, but by what? Just two numbers, 2517, 2519. There's nothing excitement about great income. And on top of that, you are paying 34 x. As I told you, anything beyond 30x is like you are paying very high premium. And you are paying 34x for what? Nothing great numbers. So it was showing you overvalued, overvalued, overvalued. Okay. Now what happened on year side, it was still showing you undervalued. Okay, why? Because on year basis, the returns that the percentage was giving was fair, which was much, the returns on year, but the current PE was perfect. Okay, so if you have a goal of like holding it for years, then it is fair enough. What happened all of a sudden? From 2519 million, the company jumped to 3,000 88 million. Now, this is something exciting. The company, which was not moving more than single digit, suddenly gave a return of a double digit. Okay. Now, over here also, the on year basis, it was again a good growth. Over here, if you see, the average growth is about 20%. Okay, for 20% growth, you were giving approximately around 34 XP, which is fair enough. Okay, now suddenly what happened? Your year became undervalued, your quarterly became undervalued, and see the EPS jump. From 50, it went lower to 49.75. It was again the same 49.78. It literally jumped into 61 suddenly. 20 points jump. Now, this is what I call when your income suddenly jumps, your net income suddenly jumps, and your P is still not increased high from 34 to 38. You're still getting at the same valuation, but the growth in the net income jumped by 20% and EPS jumped by 20 points. Okay, from 49 to 61, 20 points is almost 50% jump. Okay, what happened? The stock just reacted to that. Now you need to decide you want to stay in a very slow moving or net income company and you are paying very high P for that. Or you wait for a good company who's gradually increasing and suddenly gives a leap. This is what happened over here. A 2,500 million company suddenly gave a returns of 3,000 million. Then the growth is 3,200. Then the growth is 3,448. What happens? Your P now is always above 60. So it just like if you see a breakout, it also gave a breakout in P. And suddenly it zoomed into 80 numbers. Now, if the company keeps going with the net income and it gives another leap, it turns into 70. And if you're still paying roughly around, say, around 62, or P ratio suddenly shoots up to, say, 80. Okay. And the growth over here is not that significant. My indicator will tell you, brother, it's overvalued now. Now it's up to you. You want to exit or you don't want to exit. Smart trader, what will we do? He will do. He will move down to lower time frame or maybe daily or say maybe uh, say weekly time frame, and they will keep shifting their stop losses. What will happen? You don't need to be worried overnight. Okay, but you need to understand something that if market changes its pace or it even retraces back, since you are at a very high multiples, what will happen? The smart traders will come to book profit and retailers will not know that. Retailers will say, oh, fine, it's going day, every day up, 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 up. So I have left out. So FOMO traders will enter. We don't have to be FOMO traders. We have to be smart traders. So smart traders will try to understand this logic. Okay, so this is one of the example which I wanted to give you. Now I'll give you one another example is Tata Communication. Now I don't have to say anything. You are smart enough to understand that. See how it helps. It gave a breakout as per YTA system. Okay. Generally, one would have just taken an entry blindly with the help of the YTA system. But we can now filter with the help of YTA valuation. What is the YTA valuation is telling you? The EPS is gradually, so from 64.43, it has deteriorated 50%. So from 64, the EPS turned to 34. First only, it's not a great sign. Now the stock which was undervalued suddenly has started becoming overvalued. Why the logic is here? A company which was making 18 million as in revenue, as in net income, has become 50%. 9 twos are 18, right? So 18,000 has turned into some 9,700. Is the net income increasing? No. For this reducing net income, you are still paying 51 multiples. How smartness is that? How logical is that? Tomorrow, Suddenly, see, Tata Group right now is rising because Tata Sons IPO may be launching very soon or whatever it can be, or there is something like Tata groups have to merge in one this thing they are trying to do something. So, if that would have not been the news, would any smart investor just buy because there is a breakout? See, breakout happens everywhere. Okay. The smart trader would try to identify where is a good breakout with the help of the valuations. So tomorrow, if suddenly market crashes, such kind of stocks will fall first and it will fall left and right. But the stocks which you have taken at a low PE with a high growth net income, with the EPS is also showing you great numbers, it will fall. See, nothing will stay strong when the market falls, but it will fall gradually. It will not fall like 20%, 30%, 50%. It may fall 5%, 6%, 10% maybe. And when the market will reverse, okay, when the market will reverse, those stock will be the first one, or maybe those stocks will be the reason why the index has gone up. Now let's see Tata Motors. Okay. Now why Tata Motors suddenly went so high? It's just not because technical analysis. Okay, technicals will work. Even if I will say my YT system had given an entry at 630, even before that, it had given an entry of around 264. If I even go behind, okay. So, so if I would have been entered over here, I would have exited over here. Then I would have entered over here. I would have exited at the first red flag. I would have entered over here, and then there is no stop only. So people who would have bought a technical analysis with help of my system, say somewhere here, would be earning around 112% in Tata Motors. Okay. But that's not the case. Now the question is, do we understand these numbers? Okay, in October 2023. So what has changed in the company? Okay. Now, let me just make it a little bit visible. Yeah. Now, when the net income was negative, obviously your PE will also be negative. Okay. Now what happened when the negative PEs were there, you did not get any valuation. Even EPS was negative. Now what happened? Suddenly, if you see the pattern, the first was negative 85,000 million. Okay. What happened? 40,000 million. People will see it's a negative, but I will see this is better by 50%. Why? 85 came down to 40. Now what happened? Suddenly in the third quarter, my God, the company turned profitable. The net income came positive by 24,143 million. What happened? The returns jumped to 160% from negative to positive. Year on year, from 77% to 124. Can you see that big jump? 3x. 3x jump from 52 to 160%. Your negative 37 P became 66 positive P. Now, this is expensive. Why? Because the company just came out from negative to positive. Obviously, the excitement of the people is high. People are ready to pay very high multiples. Okay. Now, what happened? Negative 22 EPS, negative 10 EPS, 50% jump. EPS turned positive. And that was the reason why the stock started moving. Okay. Now, after that, see the jump of the income. A 24,143 million gave a net income of 106, 106,237 million. The growth, next growth was even more higher by double, 340. But P fell and it came at the sweet spot of our below 30. What do you have to do? You have to just keep on hanging on with the stock. Now see the growth from 101 lakh 6,000, it went to 1 lakh 53,000, then 1 lakh 93,000. And what PE are you paying? Only 15 for the growth of the company, which is making 26% over here and 581% year on year. On an average, if you see, the stock is making around 200% returns in net income. Okay, now this data is derived from TradingView. If you compare it with, say, screener.com or trendline.com or maybe any other kind of third-party evaluation, you might not get the same numbers. Okay, since I have not extracted the data from the external source because everybody has a little bit here and there. So what I did, I was, rather than going out, I better put the system, put the data, take the data only from the trading view. So at least there is a consistency of data and it is, everybody has the same data. Okay. What happened? EPS from -22 went to +50. What is the shift in the percentage? Okay. Almost 120% or something. And that's what you have derived from here. Now, if you see from here, what is the percentage return? 118%, almost what EPS is trying to show you. I'm very sure you would have loved this presentation. There is one more stock that I want to show you. Oracle. Now, why was this big jump in the Oracle? See, Oracle since so long was at the 13p, okay, and they was always overvalued. Why? It was hardly any growth. 18,066, 18,086, 18,061, nothing great. 18,154, 18,331. Now suddenly 21,000. The company jumped by 16% returns. Okay. On year 18%. And suddenly the stock became undervalued as per my formula, which is fed inside. And what are you paying for this 16 and 18% return? It's just that 17p. Okay. You are just paying 17 times, which is amazing for the company. If the company keeps on growing, say around 18% to 16% to 20%, and your P is below 20, Oracle can do wonders. And if the net income keep rising in multiples, like say next comes 21,700, then it comes 22,900, then comes 25,000, it will go crazy. Now, will you be just scared because it is 8,000 rupees stock? No, correct. We need to understand the valuation that you are paying in multiples to the net income. And my system is here to help you out. Okay, now see, the other stock is uh, Bosch Limited. The Bosch Limited just gave a breakout on the monthly time frame. Okay, the stock is worth how much? 29,000 rupees. It went today high at say 30,468. Oh my God, 30,000. It's okay whether you can afford it, you don't afford it. That's a different story. But if I ask you the general question, is it overvalued or undervalued? What will you say? 30,000. Overvalued. Very overvalued. Price has nothing to do with it. Okay, we have to see whether the company is making money or not. So what happened? The company was overvalued for the couple of bottom quarters and years. It turned one. I'll just remove this so that we are able to see it. It turned one time overvalued in the quarterly basis, then fair valued. But what happened over here? A 12,936 million company has doubled its net income to 23,253 million. Okay, now see the gradual increase. The company on year basis from negative percentage returns have suddenly grown up to 68%. The EPS from 438 has jumped to 788. And you are still paying P below 30. Okay, 30 is the magic number. 30. Okay, if you're paying lesser, like if you are smart enough to identify a high growth net income company below 20 also, there are more than 5,000 stock. If you sit, you can find anything. Okay, so I'm just giving you roughly a few couple of examples that how you could have been able to use my YTA valuation. set up along with my YTA system, a combination which can work wonders. And as you know that I have my book name Relative Strength with Technical Analysis. Please go and buy. And with that book theory, one is my book theory, which I've explained my entire strategy. It's available on Amazon and Flipkart. I'll just show you on the Amazon where it belongs. So if you type Yogesh Bhavsar, mm, okay, this is not this thing. Mhm. 1 second, guys. Yeah, my author had told me today that there is some error that is not going to show because we are trying to get my one of the other same book with another language. So it's going to get listed again. So whatever the situation may be, you will find it in maybe from tomorrow afternoon. The book name is Relative Strength with Technical Analysis by Yogesh Bhavsar. You can order that book. Then you can go for my YTA system, which is this, how it will help you. And there is a video. I will put a link in my below explanation and my latest YTA valuation. Okay, over here, the best part is you will also see which sector it belongs to over here, like Bosch is into producer manufacturing. In Tata More Power, if you say, then it says sector utilities. So they are basically takes whatever trading view has bifurcated the stock as per their sector understanding. Over here, it's say Oracle is like technology services. So you will even understand what kind of sector that you are investing into. Okay, so now over here, what you see is uh, an explanation of how the stock works. Now see PVR. Now we see that PVR is going down and down and down only. And we see, oh my God, the movies are making thousands of crores rupees. Where is the money going? So we don't care about all this, we don't apply too much of logic. If what we think has to be in the net income, if it is not showing in the net income, everything what we are assuming has no importance. So if you see 81,000 crore negative, net income over here, 335 million is still going in the negative of 2,359 million, and the P is still negative. And over here, it will not show you any valuation because the P is into negative. So when such kind of easy analysis is available, why are you all worried? Why do we need anybody to give you tips or something? Buy PV or say fraction of rupees. Why are we risking? Okay. So this is from my end, Yogesh Bhavsar, who gave you an explanation and understanding how to use my YT evaluation indicator. If you want to get in touch to get this on your trading view, it's available for 12 months subscription. The best part I would advise is you go with YTA system and YTA school together. They are separate scripts, not the same. So you have to pay separately for 12 months subscription. It's not a lifetime. You have to keep subscribe again and again every 12 months. That is 1 year period. And I will add you to one of my groups, and I will share good charts. They are not tips, no advice, nothing. But if anything sets up into all my parameters, I will just share you my observation for the educational purpose, that how one should look forward to such kind of logical combination of income and fundamental and technicals together, and how things can work out if everything falls in place. So get in touch with me on ytaschool@gmail.com. I will also put my common Telegram channel, which is free. I do not share any tips or over there. It's just an being connected with each other for what my new things are coming. Like if this came, I update over there. My new class is going to come physical. Going to take a class in Mumbai on 7th of uh, April. So if anybody wants to learn my entire advanced strategy, which YTA school valuation, YTA system is included in that entire course for 12 months and mentorship for 1 year. So get in touch for mentorship and training physically in Mumbai on 7th of March. I will give you all the dates and everything. So let me know whether you are interested or not. I am also maybe planning in May to come in Dubai to take a class. So anybody from Dubai, please get in touch again. Maybe we can meet over there and you can be part of my mentorship and learn from me in that live class in Dubai. I hope you all love this. This is over and out. I will post the link for my book because there's some technical glitch over there. Very soon it will be solved and it will be start available in Gujarati and in English from tomorrow again after evening or something like that. Thank you very much, guys. It was a nice presenting for you all, and hope I will keep coming for more videos again for you all, guys. If you all have any question regarding this presentation, how to again use it, or I will keep making such kind of videos for you all, which is not easily available in in free world of YouTube, where that something which is not available, I would love to spend time because it's nice to present something which is not there. Okay. Thank you guys. See you soon.